With the name of Allah, I am Fayza Professor of Accounting. Before I start my lecture, I am wishing for you to be happy and healthy. First of all, I advise you and myself to return to Allah and ask Him to forgive us and protect us from any disease. Now, let me start our lecture in Management Accounting Principles for the third year of Faculty of Commerce. Chapter 2, Budgeting for Planning and Control. In Chapter 1, we have studied cost-volume profit analysis. In Chapter 2, we'll talk about budgeting, how to prepare budget for planning and control. After studying this chapter, you should be able to: Number 1. Define budgeting and discuss its role in planning, controlling, and decision making. Number 2. Prepare the operating budget. Identify its major components and explain the interrelationships of the various components. Number 3. Identify the components of the financial budget and prepare a cash budget. The last one, describe budget for merchandising and service companies. Budget. A budget is a tool that managers use to plan and control the use of scarce resources. Do you know the difference between budget and balance sheet? Budget is a tool that prepared before the accounting period using estimated data, but balance sheet is prepared after the accounting period and using actual data. So to illustrate what the meaning of budget, let us take this example. When I get money, I feel I am so proud. What I will do by all this money? I will buy a new car, new house, new clothes, or a sandwich. Oh my God, my resources are not enough. What can I do? I must prepare a budget to plan and to control my resources. Again, a budget is a tool that managers use to plan and control the use of scarce resources. The most budgets are prepared for a 1-year period. That means it's prepared for a 12-month period. The yearly budget can be broken down into quarterly and monthly budgets. The budget can be divided into two groups. The first group is operating budget. Operating budgets help to plan future earnings and results. This type helps to plan an income statement. To prepare a budget income statement, you must in the first prepare operating budget. The other group is financial budget. Financial budgets help management to plan the financing of assets and result in a balance sheet. Also, to prepare a budget balance sheet, you must in the first prepare financial budget. Operating budget and financial budget together make master budget. So, master budget is a comprehensive financial plan. A master budget can be divided into operating budget and financial budget. Let us start by operating budget. The operating budget includes the budget for: Number 1, sales budget. Sales budgets that help you to forecast expected units sold and estimate revenue in the next accounting period. For example, if the expected units sold is 1,000 units, so what is the revenue from these 1,000 units? Sales budget answers this question. Second, are you have these 1,000 units or you must produce them? Therefore, you need to prepare the second kind of operating budget. This is production budget. The third budget is manufacturing costs budget, which you prepare it to estimate manufacturing costs. That means direct materials, direct labor, and overhead costs. The other budgets are selling expenses budget and general and administrative expenses budget. You can notice that these budgets are the components of income statement. If you work in a retailing company, you will prepare a merchandise purchases budget instead of production budget and manufacturing costs budget. I will start by operating budget. The first one, sales budget. Sales budget depends on an equation. That is, target sales equal units sold times selling price per unit. Target sales mean expected revenue. So expected revenue equal units sold times selling price per unit. Let us take an example. Example 1. The pickup trucks company, which makes toy trucks, has just completed its budgeting process for next year. Total expected sales are 100,000 toy trucks at a price of $15 each. The expected sales are as follows. Quarter 1 will be 15,000, Quarter 2 17,000, Quarter 3 28,000, and Quarter 4 40,000 units. Required, prepare the sales budget on a quarterly basis. To solve example 1, write the company name, write the kind of budget, sales budget for the year ended December 31st, 2020. Draw a table consists of 6 columns, data, quarter 1, quarter 2, quarter 3, quarter 4, and total. Under data, write units sold, selling price, total target sales. That means units sold times selling price equal total target sales. In quarter 1, units sold are 15,000. Selling price is $15. So 15,000 times $15 equal $225,000. In quarter 2, units sold are 17,000 and selling price is $15. So 17,000 times $15 equal $255,000. In quarter 3, units sold are 28,000, selling price is 15, so 28,000 times 15 equal 420,000. In the fourth quarter, units sold are 40,000 times $15 equal 600,000. In total column, units sold equal the summation of the fourth quarter units sold. That means 15,000 plus 17,000 plus 28,000 plus 40,000 equal 100,000 units times selling price per unit $15. The total target sales equal 1,500,000. Again, to solve this example, write the company name and the kind of budget, sales budget for the year ended December 31st, 2020. After that, draw a table consists of 6 columns. The first column about data and quarter 1, quarter 2, quarter 3, quarter 4, and the last one total. Units sold in the first quarter is 15,000 times selling price per unit 15. The result target sales is $225,000. In the second quarter, units sold is 17,000 times 15. The result $255,000. In the third quarter, units sold is 28,000 times selling price $15. The result $420,000. In the quarter 4, units sold is 40,000 times 15, the result 600,000. The total units sold is 100,000 times selling price per unit $15. The result total target sales are 1,500,000. I will continue the other budget in the next lectures inshallah. Goodbye.